Hey everybody, thanks for joining me tonight. I want to talk a little bit about trailing stops, but before I do, I want to just mention the typical disclaimers. This is for educational purposes only. This is not financial advice. And what we'll be talking about specifically today is more or less just a trading strategy. And so we're going to be talking a little bit about trailing stops and kind of explaining how to use them and the method that I'm going to be kind of talking about is one way to use a trailing stop, and it's a little more of a manual way. There are some automated ways to handle trailing stops, but unless you have a like a bot or something that will handle the trailing stops for you, this does tend to work pretty well. So what I'm going to be basing this off of is Zilliqua, and just kind of looking at one of the most recent runs that it had a while back. This would have been at the beginning of May. Um, so basically, what I'm going to be kind of turning this off of is an entry price at about 1338, 1350, somewhere in this range, and there was a pretty decent spike up from there. So this was a good entry point here at 1338, 1350, that area, and we saw the price moving up. And so the theory behind the trailing stop is you want to not enter a sell order, but you want to make sure that you can get out with as much profit as possible. So what a lot of traders sort of expect to happen is, you get in at the very bottom and you get out at the very top, and that usually is not the case. That's not usually what happens. You'll get lucky, right? You'll get lucky. Sometimes you'll get very unlucky and you'll get in at the very top, right? Which is why I always say don't chase the rise. You want to make sure to get in at a low point, and you don't want to get in after like a huge major run that has just recently happened. So we're looking here at Zilliqua, getting in at about 1330, 1350, somewhere thereabouts, and we're sort of targeting an exit point of 2000. Which is a pretty significant profit. So 1330 to 2000 or 1338, I think the calculation was about 49%. That's a pretty significant increase that we're looking at here. But the way that you want to take these trailing stops is you want to give yourself enough range so that you can continue to hold your trade as it rises up. So we're seeing, we're entering right here. I'm not going to enter a trailing stop right here immediately. I might have a stop loss, right? So I might have a stop loss based on, some candle wicks that have occurred, and you can see we kind of dipped down a little bit, which is why I'm kind of thinking, this is probably a good place to get in. My stop loss would probably be right here, about 1250 or something, but I won't start using a trailing stop until the trade has kind of gone through for a while, and I want to kind of see where things are going. So I see things start to move up. I see a little bit of a retrace here, and that's a small retrace. And then it moves up, and as it goes up, of course, normal market movement, it goes up and it comes down, it goes up and it comes down. So here is a big retrace right here. So this is sort of what I'm going to use as a first sample set for a trailing stop. So I see the price then continue to rise up. I haven't exited the trade yet. I'm really merely just analyzing what's happening here. I see a really big green candle, okay? And then it just continues to go up. I see a bigger retrace, which is actually an 11.59%, or more importantly, a 218 Satoshi drop in price. Now that's bigger than the 126, right? So that's a pretty big drop. So this is what I think I'm going to use. So the price does continue to kind of move sideways. It doesn't continue to follow this downtrend. So it continues to move sideways. So I'm deciding right here, this is probably a good sized retrace that I'm going to use for my stop loss moving forward, because what it looks like, we're moving up a little retrace, moving up a little retrace, a slightly bigger retrace, but then this big green candle here tells me that there's still money flowing in. I'm seeing a decent amount of volume, so the price is probably going to continue to go up. So I'm going to take this retrace here because it's kind of a large retrace that we've seen, I'm going to take that and I'm going to use that as the size of my trailing stop moving forward, knowing that I'm targeting 2000 for my exit. So, okay, I've got this as my trailing stop. I'm going to allow myself 218. So as I move through these candles, basically, as it moves up, I'm going to just continue to move my trailing stop higher. And you can see this happening. So right now, my trailing stop is at 1596. Right now, it continued to move up. So I'm going to take it from my highest point. Now I'm at 1617. I'm going to move it up. I'm going to continue moving up to 1677. Continues to move up here to my top point, which is 1745. It goes down. So I'm keeping it right where it's at 1745. But then the price goes up some more at the highest point right here, which is now at 1756. I'm going to kind of give away the end here, but this will kind of give us a little bit of an idea. I'm going to move this up, and now I'm at 1805 as my stop. I haven't gone down below that point yet. I'm going to continue to move up. I'm moving up higher. Now I'm up here at 1979 after moving up. Now from here, you can see this next candle, it does dip down to about the 2000 mark. It has not dipped down to my 1979 yet. So I'm still moving up. I'm still moving up here. And then once I get to my next green candle, all right, now watch, this is where the magic starts to happen. So my next green candle goes all the way up here. So now my trailing stop is sitting at 2,230. Now, the really important thing here is I was targeting 2000 to get out, but by using the trailing stop, I'm able to continue to ride the trade up. So I'm just going to continue to move this up. So now I'm all the way up here at my top point, which is to about 2,500. Now is where you need to make the decision because you're way over where your original target was, right? So do you want to exit out here and maybe just assume that that's going to be the end? 2,500 seems like a pretty even number, and chances are pretty good it's going to start to go down, right? And we know that when the price goes up at a very rapid pace, it usually goes down at the same speed or even quicker, right? So we're just going to go ahead and leave our trailing stop here, which is going to be at 2285, and you can see we get stopped out. Okay, so let me just remove this indicator here for a moment. And let's just kind of take a look and see what just happened. So we got out at 2285, which is right here. We topped out, and we're basically getting out. Well, this is a slightly different, about 2291, right? So we didn't get out at 2500, but so we missed out on some of these profits. But the point of the matter is here we are trying to raise our stop loss as the price goes up, but allowing ourselves to accommodate for the largest retrace on our rise up. And once our retrace has exceeded what we feel is the acceptable retraceability point, then we just have to know at that point, this is where we get out. So yeah, we missed out on 8.64%, but what we gained in addition to our original exit of 2000, we gained an additional 14.37% on top of really where we wanted to get out. So this is really just an example, of course, an example based on a recent price action. We saw ourselves, instead of getting a 50% profit, to getting a 70.5% profit. So let me just kind of show that what this looks like. So we're our entry point here about 1341 or so. Our target was a 49.16% increase at exiting at 2000. But by using the trailing stop loss, instead of getting 50%, we were able to squeeze out an additional 20%. That's significant. That is very significant. So that is the power of the trailing stop loss. There are some automated trading utilities out there that will do this for you, but it does it off of the candlestick closures and things like that. And what I have found is it's just easier for me to take a look at a chart and watch the market move and determine where I need to get out. You can look at trend lines all day long, and you can create exit points based off of trend lines. You can be very successful based on that. But the trailing stop loss, if you are able to look at the charts, you're able to be on the exchange and move your sell orders, your stop loss orders as the market moves up. Then this could be a pretty profitable strategy for you. Now, of course, Bitcoin is not doing the greatest right now, though actually the whole market pretty much sucks right now. I'm just being completely honest. There's a whole lot of manipulation going on that I'm not really going to get into a whole lot, but in the future, when the altcoins and Bitcoin do return, and we start to see the prices start to move up again, this can be a very good strategy for you to maximize your profits and potentially get some additional profit where maybe you were targeting a certain point. The price continued to go through. You just need to make sure to if you don't sell at your target, to could just continue to move up your stop loss, because that's where you're going to get saved. But you do have to keep on the charts. You have to keep on your order book to make sure to adjust your stop loss. If you're not able to sit at the charts, you're not able to trade, every day or every hour, whatever it may be. As I always say, set a comfortable sell order at a decent amount of profit. Don't be greedy, and just let that flow. So I hope it helped you. Feel free to like, subscribe, share the video with your friends. Again, this was just one strategy for a trailing stop loss. This is not the only strategy that there is, but it seems to work very well, and I've used it in the past with some pretty good success. So feel free to leave some comments and all of that if you have any questions. I'll be more than happy to answer, and feel free to pop a question in Discord if you have questions as well. I am always here to answer your questions. So everybody have a good night. Thanks for joining, and peace.